All right, welcome back to the Brutally Honest Loan Officer podcast. I am Stephen Brock with the mortgage firm, and then we have Mr.
Brown. Welcome
Woo,
back, everyone. Happy to have you here. Steven, good to see you, man. How are you?
doing good. This is going to be a good episode today because we are going over the Fed's impact on home buying.
Navigating the future. Navigating the future is what we're calling this podcast episode. But yeah, we're going to unpack how just the big decisions coming from the Fed are affecting the mortgage industry, specifically mortgage rates, and what it means for somebody as a home buyer. So I do want to start off and kind of be clear to the point that the Fed does not specifically control mortgage interest rates, but their decisions on rate hikes or rate cuts usually are done because of inflation, and inflation is specifically what drives mortgage interest rates. So we're going to kind of dive deep into how the Fed can, have an effect on that, and give a little insight on where we think rates are going.
That's right. So it's kind of a whirlwind that's happened lately. We were all kind of under the impression that maybe the Fed would lower some stuff here soon. But it has definitely in the last month now. We're in the end of February. The last month has really kind of changed things. So when we talk about the Fed, we're talking about the Federal Reserve or the Fed. So it controls the Fed fund rate, which, like you said, influences rates across the board, which includes mortgage rates. But it
Right.
doesn't.
Usually it's more towards short-term lending, banks, what they lend to each other and stuff like that.
Exactly. And I want people to understand that when they raise rates, that's credit cards, car loans, anything with mortgage rates between the banks and the consumer is what actually gets raised.
Right. Yeah. So, I mean, imagine if your rate goes up if it's car loans, bank rates, credit cards, the cost of borrowing gets more expensive. It's as simple as that. So it just means higher monthly payments. So especially when we're talking about mortgages, the difference in higher payment because of the interest rate alone could push people out of buying. They may not qualify for, what they qualified before. But if, on the other side, if rates are coming down, it means that a buyer might be able to qualify for more. They can afford more home for the same amount as far as payment goes.
I will say
So it
recently,
really depends.
I recently had a client that came back. When rates kind of hit their peak, September, October of last year,
Yep.
we were almost, some rates were in the eights, low or high sevens, low eights. And I had a client come back and redo their pre-approval now. And granted, the Fed hasn't cut rates since then. They haven't raised them, but they haven't actually cut them. But rates have naturally just kind of slowly gone down in that time span. And he had, I think it was a little over $70,000 more purchasing power because of the rates coming down. And they didn't even
Right.
come down tremendously a lot, but that was the spending power he had now. But it's not just about rates. The Fed's actions that they're doing shows the health of the economy. So
Right.
we were all kind of seeing that the Fed might actually lower rates, and then we get the report that inflation is still higher than they expected. The job report came up 200,000 jobs more, which signals a strong economy.
Yeah, but that's also and I hate the way they just so the Fed gets a jobs report, BLS jobs report comes out, says that there were all these job creations, but they just look at the headline, they're like, oh, wow, okay, sounds good. And then they don't read into it. Like when I look at, let's just say there's a teacher and he or she gets paid this amount, but also starts driving for Uber in order to make ends meet. They look at it like, oh, job creation.
Yep.
It's not. That person is doing it in order to just pay bills. It's not a job creation. And when somebody during, especially Christmas time, we had tree farms and you could go and buy Christmas trees and there's workers there. That's seasonal. They don't do that year round. But they look at that like, ooh, job creation. And it's like, are you kidding me? That job will be gone in 1 month. That's not a job creation. So there's a lot of, I don't know, it's just simply misleading, and it's wrong to look at the headline and just take it, as what it says, instead of really reading into it and understanding the report, which is why we're going to get revisions. And hopefully those revisions come out saying that, instead of 200,000 job creations, it was, 80 or whatever that may be.
Yeah.
But it's just, I don't know. And the inflation report came out saying that inflation had cooled a little bit, but not as much as we were expecting. And there was an expected number. And because we didn't hit that, the markets
That
went
was the
into a
thing.
tizzy.
It was all these expected numbers. We were expecting this and it didn't hit. Like we were expecting 100 and something jobs created, and it was 200 and something over that. So it was like 300.
Right.
And then, we'll see how that revision comes in. It comes in several weeks later, and but the market's already reacted to that news.
Right.
The CPI number came over, I think it was a 0.1 higher than they wanted it. So that made the market kind of, what it's signaling to the market and the investors is the Fed has no reason to lower the rate yet. Because
Right.
that point, those headlines point to the economy is doing just fine, that they have no reason to actually to lower it. And
Right.
that's what the Fed can do. The Fed we saw a huge market, but our buying market, and people were spending hundreds of thousands of dollars over home prices back in 21 and 22 when rates were super low. And then the Fed started hiking the rate to get inflation was out of control. So they're trying to get inflation under. And when they were hiking that rate, it actually cooled off an overheated market that we had. And then it could also do the opposite. The Fed saying they weren't cutting rates had a lot of borrowers coming back to the market. Or the Fed wasn't going to raise the rate anymore, that they were going to wait. That had buyers coming back to the market. So also when they start cutting rates, that could bring more buyers to the market.
Yeah. No, and I think we're just in a weird scenario where, is it a good time to buy? You know what I mean? Like, and that's the question we get asked all the time. And it really depends on each individual buyer's circumstances. If you can find a home that you like right now in this current market with a payment that you can afford, I say buy. Because we always say you can refinance later. Now, when is that going to happen? Not 100% sure. But I would guess that in the next 2 years or so, you'll have an opportunity to refinance to a lower rate. I think the idea of interest rates lowering is just going to take more time than we initially thought. But we're looking at supply and demand. That's another issue that comes up because of what the Fed's doing. If it raises interest rates, a lot of people get off the fence. They're not interested in buying. It's too expensive for them. So then that creates, and it also makes other people that we're gonna sell a house and then buy, could create less inventory. But for somebody that's willing to buy in that market, there's a lot of negotiating power with sellers because there's less demand. So you might be able to get a phenomenal deal right now as far as your out-of-pocket expense. So looking at that, that's one way it might be a benefit to buy now. It's just less competition. And I have a feeling that if interest rates all of a sudden overnight went down by a full point, it would be like pandemonium.
Yes.
Just crazy with the amount of people that would jump back into the market trying to buy a house.
I think they say it's like 5 million people. Like if the rate lowers 1%, like it brings 5 million people back to the market, is the economic statistic for it.
Which is crazy. But then the other thing to consider too, when you're like, buy now before the demand gets out of control, because if demand is higher, people are willing to spend more for the same product. So if you've got a $400,000 house now, in a year, if rates are lower, it might mean that house is now worth 440,000 and somebody's willing to pay 450. So if you are going to wait from now till then, you just missed out on $50,000 in appreciation.
Exactly. And I liked how you put it earlier, that if you're able to buy now at these higher rates, make sure that you're able to afford it. Do your budget. You're actually trying to buy, because some people, I get it all the time, like, should I rent or should I buy? We did a podcast on it. I've done videos on it, and it's more like, if it makes financial sense for you, yes. Everybody's different. There are people, we're we're a loan officer, so everybody thinks like, oh, if I ask him, he's going to tell me yeah to buy. And I'm like, no, not all the time. You might need a rent. Maybe you can't afford what's out there. Maybe you're thinking about moving in a year or two. Would it make sense to buy? Like, so there's just different parts of it. So let's say that like we went over that the Fed does raise a rate, it raises everything. They lower that, credit cards, mortgages, your savings accounts. That's what people don't realize also, that your savings accounts are going up. Your CDs that you have out there also go up. So the same thing, if they start lowering it, those aren't going to be producing as much money for you.
Right.
And so I think a lot of people focus on rates as the debt rates, mortgages, cars, credit cards, but they don't also realize that it's in their for savings account and money market accounts, that also when the Fed raises those rates, those you can make more money off of those. So when they start lowering rates, those are going to start lowering too. So you're going to make less money off of those investments.
Right. No, agreed. I mean, and like we said, lowering the rates gonna cause pent up demand to come back. I don't know. It's just, I sold last year my house, and then we built a house or whatever, but closed this year at a much higher interest rate than when we initially like started out. For us, still made sense. Like we've got a beautiful home, dream home, just a little bit higher rate than we were expecting, but will I be looking to refinance in the future when that day comes? Yeah. I'm not stressing over it, hoping that it happens by a certain time. It's just when that opportunity presents itself, yeah, I'll probably refinance, save some money then. But all while, my home is still appreciating now, versus trying to, wait and wait and wait. It's just, I don't know. I think that there's some people that are waiting for the right reasons. And I think that some people are waiting and missing out.
And I want to put out there is that we're talking about the Fed, and that's very national of what's going on.
Oh,
We got to remember real estate is local. There's certain pockets in the market now where home prices might be coming down. There's certain pockets in the country where home prices are going up. So granted, a lot of these headlines, like I said, are national. You have to ultimately, it's local. And, that local job market, the new construction going in there, do you have to pay attention to that? So that's another caveat on, are you renting or buying? What does the market kind of look like for you? It could be completely different from one location.
Right.
We're what, 2 hours, 2.5 hours apart. It could be completely different. I mean, we are in completely different markets, though we're both in Florida.
Right. Yeah. So, I mean, if you're looking at the national numbers, don't take it to heart. Don't think that it applies specifically to your neighborhood. It doesn't. I always tell customers like, I deal with people moving to Florida, obviously, but I also have past clients that might be moving, and I've had past clients that we stay in touch with who say, Derick, we're moving. Okay, fantastic. Where are you moving to? But somewhere else in Florida, great. I can still help you. Or they might be moving out of state, but I've never had somebody that, just says like, hey, Derick, we're moving to Oregon and we're really excited about it. I've just never had that, and then looking for us, what was that article that came out that said that I think it's 1,000 people per day are moving to Florida.
Yeah.
So for our specific area, like, and I live close to the Orlando metro area, so closer to Disney, closer to some of the beaches, like we're in this perfect little pocket where there's a lot of demand for where we live. So our home values been staying put. Homes have been appreciating. We haven't seen crazy price drops. We've seen, and don't get me wrong, we've seen some price drops, but I think we've also seen some home buyer or homeowners that are listing their house higher than what it would potentially appraise for, thinking like that they can still get it, and yet there isn't as much demand now. So then they're doing price reductions, and people are looking at that saying like, oh, they're having to do price reductions. Well, a price reduction from what somebody's willing to pay or from an appraised value below could be potentially bad, but dropping a price from what the seller's expectation is and what they want to a normal value is not a bad thing.
Yeah, exactly. And I would say, talking to a bunch of realtors and going over the market stats, is they're like, if you price it right, it's still selling.
Yeah.
It might not be within the first 10 seconds you put it on the market, but at a reasonable time, it's still selling if it's priced correctly. And they'll
Well,
tell their sellers like, hey, you're overpriced. Like that's the only reason it won't go. Like it's overpriced.
right. I had a customer selling a house, working with a realtor. We've worked with this customer before. So I was talking with the realtor, listed the house, beautiful, listed, correctly. And just a little bit of time had gone by, a couple of weeks, and then I was like, okay, so just like, are you doing a price reduction? Like, what are we going to do? So they did a small one, nothing crazy. And then next thing you know, based on that, I think we went from like 300 to 290, maybe not even. And then they went under contract. And I was like, do you mind reaching out to the buyer's agent and asking when that customer got pre-approved? And she's like, sure. So turns out that they had gotten pre-approved 4 days before they made that offer. When that house was originally listed, those buyers weren't in the market yet. They hadn't gotten pre-approved. They couldn't make an offer. So it's just a matter of timing until the right buyer came along. So, talking with some of the realtors that we work with, are you listing the house accurately? Are you going a little bit higher to see what happens because the seller can wait? And then we're seeing houses sitting on the market for longer. I don't know. I mean, there's not like a perfect method to it, but like you said, price or homes that are priced accurately are selling within a normal amount of time. So I don't know. I'm not seeing like a crazy market where there's just no buyers, no activity whatsoever. But are there homes sitting? Sure. A lot of them are just simply overpriced.
Exactly. I think there is still a lot of overpriced homes. I think we had like in our area in Palm Beach County, we had like a 6 or 7% increase of appreciation, which doesn't sound like a lot compared to 21 and 22 when they were double digits, but like a
Yeah,
normal market, 7% is a lot.
correct. I think
Usually it's,
my market is historically between 4 and 5% appreciation every year.
yeah, that's where we're kind of like three to five, 4 to 5 every year is where it is. So it's still homes are still going up and there's still a demand in this area for them. So
Yeah.
but like we said, we went over what do you think the Fed is going to do now? Are you thinking? Here, I'll kind of answer my question first and let you, since I kind of put you on the spot. It's like I thought the
Yeah,
Fed
it's
was
the
going
Steven
to.
show. Go for it, bud.
I'm doing it. I am doing it. I think the Fed. I thought the Fed would do something in May until those numbers came out, and now I'm thinking it might not be until the third quarter where we see the Fed possibly lower it. Now that's with the data we have now. Something could change that. But what are your thoughts? Your little crystal ball, and I'll hold you accountable
It's
to
like, what's the Fed going to do? And honestly, like, I think so much of it just depends on how the Fed responds and how they talk at the meeting, regardless of what they do. They could say they're not going to do a rate cut in May. We know they're not going to do it in March. But there's still hopes of like a 50-50 shot that they do a rate cut in May. But as long as they just come back and say, like, you know what, we're pretty sure we got to get grip on inflation. It's coming down slower than expected, but we're fine with it. Just saying that would be amazing for the
Yeah.
market because investors would be like, okay, they got a grip on it. Inflation's coming down slowly but surely. Cool. Like we don't need to raise rates and, try to, stop spending. So, I mean, just the way they talk about it would be great. Jerome Powell, stay off 60 Minutes. Don't be an idiot. Like that would be fine because he did that this past month, and just him going on 60 Minutes made a little ripple in the market that we didn't like. So I think that the Fed presidents that have a voting decision on whether to cut or hike rates, I think majority of them will lean more towards a cut either May or post May. So that would put us into third quarter. But honestly, it's just some of these reports that we're watching come out. It looks like inflation is slowly coming down. So that's what I think, rate hike or rate cut.
You've been so used to saying rate hike for the last year and
I
a half,
know.
you can't even say rate cut.
I didn't like the way it tasted when it came out of my mouth. But no, rate cut probably third quarter. But I'd be really happy if they said that in May. You know what I mean? Like just talked about like we're probably planning towards a rate cut third quarter. I think that alone would help the market tremendously.
Yeah. Yeah.
You know,
Them
so
saying what, October of last year, October, November, where they said, hey, we're not raising the rates anymore for the rest of the year.
yeah,
Rates started going down. The market started
right.
cool, or the rate market cooled down, which was they basically
Well,
did,
and here's a fun fact.
and
What
everybody was
meant
like, oh, they cut the rates. I'm like, they didn't cut rates. They just said they weren't doing anything for the rest of the year, and that made rates come
correct.
down.
Right. So November 2022, there was a rate hike, but an inflation report came out showing that inflation was coming down. What happened? The market improved like crazy. Interest rates like were dropping. It was an incredible day. But wait, the Fed hiked the rate. So how does that happen? It's because an inflation report came out saying that, inflation was coming down. So, that helped the market tremendously. And then we saw that it wasn't coming down later and stuff like that. So again, it all depends on, what's happening in the market, what is happening with inflation. So if we've got a grip on it now and the Fed comes out and starts talking about it that way, I think it'd be great. But there's no crystal ball. It's just a matter of, time. If you can afford to buy in this market, I would buy now. And then just enjoy the appreciation over the next couple of years, because that's what we see happening.
Yeah, I think that you're right that you should buy now if you can afford it. If all things point that you should buy, that the only thing that's making you hesitant is the higher rates, then you should probably buy.
Right.
Well,
Cool, man.
that's our show for today. Kind of figuring out the market that nobody understands. Still like
I don't think we're figuring it out. I think we're just giving our professional opinion as two loan officers that have been in the industry for nearly a decade. That's just what I see happening. And everybody that we're talking to, we recently had our COO on, kind of said some of the same things. But
she
yeah, just
predicted it perfectly.
Yeah, she did. Kind of exactly
Like
what she said is exactly what happened.
Yep.
Which is crazy, but that's why she's COO.
Yeah.
But yeah, thank you for tuning into the podcast. Should we start asking people to like and subscribe? Like I always hear that on podcasts, but I feel weird saying it.
All right, everybody. Thanks for listening to today's podcast. Please like and subscribe to our podcast. Give us a honest review, which should be 5 stars. If it's less than 5 stars, email Derick and he'll take all your complaints.
Yeah.
And that's it, guys.
But we would love to hear from you. So if you have any questions or if there's a topic you want to hear of, let us know. Otherwise, this is our most recent podcast episode of the Brutally Honest Loan Officer Podcast. Thanks for joining us. Please like and subscribe. See ya.
See you guys.